Find a financial planner who will work with you ongoing as you're just starting to amass assets. You're probably sitting on a lot of debt from your education. So I think having a nice roadmap really helps people do that.
This is the Door World of Money podcast. I'm your host, Rob Berger. Today, I'm excited. We have Tracey Bissett with us. She is an award-winning financial literacy educator. She founded Bissett Financial Fitness. We're going to talk about that. She hosts the Young Money podcast. And if that weren't enough, she's a full-time professor in the financial services faculty with the business school of Centennial College. And I've got a lot of questions about that as well for Tracey today. She was awarded as the most influential financial literacy leader and the best financial education and consulting firm for Bissett Financial Fitness. And with that, Tracey, welcome to the show.
Thank you so much, Rob. I'm excited to be here.
I appreciate your time. You're in Canada now, is that right?
Absolutely, in Toronto, Ontario, and I grew up on the east coast of Canada in Nova Scotia.
So here's a fun fact that maybe if I were better at history, I would have known this. But we actually invaded Canada. I didn't know that. Did you know that the United States invaded Canada?
I think I have a vague recollection of learning about that in history class.
In fact, it was in the War of 1812.
Oh, I remember that one, yeah.
Yeah, and Monroe, who at the time, he wasn't president yet, this was under the Madison administration. I bet you didn't think we were going to discuss history on this show. He was the Secretary of State and head of the War Department, as they called it. He wanted to take over Canada. He was ready just to move the border. He was just done with it. Yeah. Fortunately, we've been friends ever since, and that was really more about Britain than it was Canada. Anyway, thanks for tolerating my history lesson. I want to sort of start with your teaching. What kind of classes do you teach?
So as you said, I'm in the business school and financial services. So we're teaching students to become financial planners. So we have a high proportion of international students. So I would say 55% from India, about 35% from China, and then various other countries. And people are looking to make their way to Canada and get started in the financial services industry, which is great. Usually really steady industry. We've got 5 major banks in Canada, so it's a little bit different than the US. So we've got really big giants kind of monopolizing the playing field. And usually I teach courses that are leveraged based on my background. So one of my favorite ones is corporate credit. So I'm talking about loan structuring and cash flow for businesses and how do we maximize our cash flow. This semester I'm also teaching behavioral finance. So why people are not as rational with their money as all of the theories tell us they should be. So when human emotions and biases come into play, why people behave the way they do. So that's been a really fun one. But all over the years also taught insurance, taught sales, pretty much anything related to financial services.
Right. What are some of the biases that you see in your practice that listeners should sort of at least watch out for, sort of be sensitive to the fact that they may have some of those biases themselves?
One certainly is overconfidence. So entrepreneurs especially, they feel like they can do anything. So if they're great at whatever led them to start their business and whatever they offer in their business, that usually translates into every area of their life that they feel so confident. And when you're overconfident, you can make mistakes. And certainly people do make lots of mistakes with their money. So that's one. Certainly people are risk takers and willing to try speculative and new things because they feel like they're doing well, kind of navigating out on their own into the big world. And so they can take a chance on things and not really thinking about what might be the downside of things that are not necessarily proven.
You know, that's a good one for sure. One of the things I've noticed as I've gotten older, you're I think where most folks are aware of, that emotions play a factor. And you try to address that, particularly when it comes to investing, right? And trying to deal with the fear in a bear market, or maybe the euphoria in a market like we've had here recently. But the thing is I found that as soon as I think I've got it figured out, and maybe for a time I did, figured out meaning I kind of understand where I am emotionally. As you age, it changes. I mean, what I wasn't afraid of 20 years ago, maybe didn't need to be. Now I'm more concerned with it. So it's as soon as you think you've got it figured out, you age and your life changes and you've got to do it all over again. that make any sense?
For sure. And absolutely whatever was going on in our households when we were 5, 6, 7 years of age really has a big impact on how we approach money and our relationship with money. So I grew up in a household where we talked openly about money. I knew our family had a budget. I received an allowance. I wanted to go to the corner store every day in the summer, and my mom told me that was not going to be happening because we had money, but not for me to do that. And so I figured out ways to make money. So for everybody who's listening, think about what was going on in your house. And that is probably your first reaction when anything comes up related to finances. So
that is so true.
Even when a bill pops in your email inbox, how are you feeling? Do you have some pit in your stomach? Even though you might have the money to pay the bill, you're just feeling that gut reaction. So that stays with us our whole life unless we actively work to change it. But then so true, as you mentioned, as you get older, different things are more relevant and become things we need to consider and may guide our reactions.
Yeah, for sure. I mean, my risk tolerance has changed for a lot of reasons as I've gotten older. But anyway, and certainly I can think back to my own childhood and how, because money was always an issue growing up for my family, and how that affects me today. And in some ways, it's been a good thing. Oddly enough, it's helped me stay out of trouble, I suppose. But definitely, no question, our childhood affects how we feel about money as adults. So let's talk about your practice. What exactly is a financial fitness coach?
So for me, I really like to start from the positive and build on what people know to really increase their education so they can be empowered. So I'm not a financial planner. I'm not going to create financial plans for individuals or business owners, but really an educator. So most of my coaching is done one-on-one or in group programs with business owners to help them understand and read their financial statements, to make sense of them, help to understand their cash flow cycles in their business and how to maximize how much is coming in and minimize those outflows. And so it's really about taking their industry that they're in, wherever they are starting, and bringing that education for them so they can feel like they're in control of their business and actually increase their confidence. They usually know more than they think, but they don't know the language of finance, which can often be a barrier to really running with it and feeling confident and competent in that area of the company.
And are most of your clients small business owners?
Yes. So I work with companies. Sales are usually anywhere from kind of 50 to 100,000 up to 2 million. So usually beyond 2 million, there's someone either in a part-time capacity or fractional capacity in companies of that size. So I'm usually 2 million and under in sales, but work with people across all industries.
Okay. And is it just Canadian companies?
No, it can work with anybody around the world because I'm not doing their bookkeeping and I'm not their accountant. It's really purely from an education standpoint. So how do I help you fill in the gaps that you may have in your business when it comes to the financial side? Unfortunately, I see a lot of business owners feel ashamed and they're very reluctant to get assistance in this side of their business. They're under I would say under the misnomer that they're supposed to know how to do this already. And in Canada, we do a poor job in the education system teaching about personal finance, let alone barely cover anything about business finance. So I like people to know that it's not your fault that you don't know, but if you're going to run a business, you do need to figure it out.
Well, let's talk about that. What are some of the things that you encounter most that business owners don't know or don't know well enough that they should? What are the mistakes, I guess, that you see business owners making?
So the first one I would say is lack of accountability. So people usually fall into one of two camps. One, I'm just going to work hard and make money and it's going to work out. I'm going to sell stuff, so it'll work. Or I'm going to delegate everything to my bookkeeper and accountant. And yes, you should absolutely have professional assistance to help you if that's not your area of expertise and you don't want to do it. But you need to look at your numbers and you need to actively use them in your business on a regular basis. The second thing I would see, especially for newer business owners, there's this commingling of your personal and business expenses and everything's running through the same account, which makes a mess. So when things aren't going well, you don't know if your life is too expensive. You don't know if your business is making money, and it's really gives you a lot of headaches to do that. The third one, just to cap it there, I would say is people get so focused on sales. So social media hypes sales and launches and what is that sales number? But what's more important is, are you actually profitable? Are you actually covering all your expenses? And are you getting a steady paycheck from your business, which is usually why you probably started it.
Yeah, yeah. I wonder, and I know a lot of business owners, including good friends, family members. And one of the big issues that I see in sort of, particularly in service-oriented businesses, services being services provided to the end consumer. You could think a plumbing business or electrical business or contracting or painting, is cash flow, because they have to invest a lot up front. They're getting paid, net 30, net 60, depends on the arrangement. But they've got to buy all the materials up front. They've got to pay their workers. Workers aren't net 60. They want to get paid.
Not if they're going to keep working for you.
Yeah. And I've literally seen business owners, it takes them years to feel like they finally have caught up and have the cash flow that they need to keep the business running. Do you encounter that? And what tips do you offer to business owners to try to dig out of that vicious cycle?
So if you're just at the beginning of your business, and you can always do this, even if it's not the beginning, but actually start with a business plan. So who are you going to serve? How much are you going to charge? And what are going to be the expenses that you need to actually ramp up? And part of thinking of your ramp up time before you're making profit includes, how am I going to pay for those employees, those materials, and all of those things before we actually get paid from a customer. The easiest way I can explain cash flow is money comes in, money goes out of your account, and the timing that it happens is really the magic. And usually the magic is that the two don't line up. So you're usually short on the day you need the funds. And so I work with clients to actually create forecasts based on their particular business in the industry that they're in, because all industries have different cycles. If I was an event planner, somebody would pay me a 50% deposit before we agree to do anything together. I would then make sure they pay me before I go and do the event. So I've got all my money up front. Like you mentioned with contracting, they've got a lot of things they got to pay out. So how well are they actually setting up their terms with their clients? Are they making sure they get milestone payments so that they can cover the materials and the labor as they're moving along? Or are they waiting until the end of the project? And so thinking through the industry that you're in and your cash flow situation that you're starting with and what you want it to be can actually help you in terms of not only pricing, but how you're going to set up your payment structure. And that's really important. Yeah. And I would say most business owners don't give it a thought. But certainly being a lender for many years at TD Bank, which is one of Canada's big five, I've seen companies who were really profitable on paper. Their sales were greater than their expenses, but they went out of business in as quick as 90 days because they didn't have the cash coming in to keep things going.
Yeah, I've talked to business owners, think construction, who and they've gotten smart about it. But for example, they would focus just on residential work and actually stop doing commercial work because the payment terms for commercial work are terrible, or can be. Profit margins don't tend to be as great. And with residential, you get paid typically as soon as the project is over. Yeah,
and they're usually shorter projects. You don't need as big crews or as much material, and so everything is more manageable.
Right. The kind of thing I would have never thought, having no experience in that kind of business, but in talking to owners, you see these sorts of decisions that they have to make, and you begin to appreciate it the next time you call someone for an estimate for something, just on that business, even a profitable one, what it has to go through to deal with all that. Do you find that what you teach on for business owners then has great or meaningful application on the personal side of finances?
I think if you're truly thinking about it, everything translates. So cash flow is the same. Money comes in, money goes out, understanding all the sources that it's going to come in from and the timing. Same with understanding your expenses, like that should translate. And people often do budgets on their personal life, maybe not as much cash flow, but if you're finding that you're struggling with being able to pay your bills, doing a cash flow is really helpful.
Right. Are you familiar with Profit First?
I am.
What's your thoughts on that sort of approach to running your business's finances?
I think that it is a great approach once things are going and it's working. it is very hard to implement that from the beginning if you are not starting from a cash reserve or really kind of plentiful place. Because at the beginning, you're usually not getting a steady paycheck. You don't have extra cash around. And so I know they would advocate that they put it in place right away in your business, but it's hard to do that right at the beginning.
Yeah. I mean, the concept to me is one of those deals where this whole sort of business has grown up around the concept of profit first. And I've never used it in my business, but at the same time, it seems so, it's like pay yourself first. I mean, it's kind of no different than at a personal level where you say, okay, first thing I'm going to do is save 10%, and then I can spend what's left. And I'm thinking, do we need a whole book? I mean, I'm not being critical of profit first, but it's like, really? I don't know. It just doesn't seem all that. I know he has you set up like 5 different accounts and all this stuff, but the concept anyway, to me, seems kind of straightforward and not very controversial.
I think that for those who adopt it, they haven't thought about money in that way. And so it's not common sense. And so people really embrace it because it's made it simple for them and it takes the guesswork out of it. They don't actually have to set it up themselves. They just follow what it says. So I know a lot of people who do use it, but for people who are starting up or still struggling in their business, it's very hard because then what ends up happening is you keep transferring money back and forth from all the different accounts just to cover the necessities.
Yeah. The other thing I've seen, maybe I'm curious if you've experienced this, but business owners aren't as careful with the business assets. In other words, money comes in and they're too quick to spend it. It's like they're not spending their money. It's the business's money. And heck, I get a tax deduction anyway. So it doesn't really cost me, $10,000 for this fancy computer or whatever. I'll get a tax break. And so they tend to spend money, I don't know if I'll say irresponsibly, but maybe not, they're not as careful with it as maybe they should.
Not as intentional.
You see that?
Yeah, absolutely. And because you often hear people saying, oh, I can write that off. Well, yes, you can write that off, but you still have to pay for it. You get a break on your taxes. And so for me, again, that comes into kind of budgeting, forecasting, cash flow planning as well, because what are the things you want to do in your business? If you're going to start working with more corporate clients and they're going to pay you in those 30, 60, 90 days, you either need to get access to a line of credit or build up your cash reserves. And you can't spend all of the cash that's in there because you're not going to be able to float your expenses while you're waiting for those payments. So it all comes together in terms of what's the strategy for the business. What are the things that you want to do? A lot of business owners will try to save up in advance when they're going to hire a new employee so they can make sure that they have the funds on hand. But if you're just going day to day, oh, I've got cash, I'm going to get this new thing and don't worry, I'm going to get a write-off. The planning really, really helps when you can make that a discipline and a routine.
Yeah. Do you work with clients who may have a full-time job? In the US, we'd call it a W-2 job. I'm sure that's not what they call it in Canada. But then have, a side gig. They're doing consulting work on the side or, like I did. I started a blog that became a business. Do you work with folks like that? And what kind of issues do they tend to maybe face that are different?
Certainly, I want to work with anybody who's interested in increasing their financial acumen and their skill level, because I think that it reduces your anxiety. It's a lot easier to deal with problems you know about and increases your confidence. You're able to take more calculated risk, I think. Some of the issues they face is kind of, sometimes they're starting it as a hobby. So they're trying to take a hobby and make it into a business. Sometimes they find that it's fun when I do it a couple hours a month, but now that I got to do it when I'm already tired on nights and weekends, it's not as fun. So they run into that quickly. If it is something like a hobby they're trying to translate into a business, it could be that the rate is not going to be there that they are able to charge to actually be profitable. So unless you examine it, you're not going to see that I'm not going to make enough money to actually cover my salary plus expenses of having a business too. And just getting caught up in perfection too is one of the things I see. And I know that certainly going from banking into starting my own business, I saw that with myself as well. Like you're trying to perfect everything before you put it out into the market. So best to get stuff out as soon as you can and get some real live feedback on it so you can make tweaks, because what you start with is never going to be the finished thing.
Right. When did you so you were at TD Bank, I think, right?
Yes.
And when did you transition? Did you go right from TD Bank to your own business?
I did, because there was a restructuring. And so instead of picking up another job doing the same thing, I thought, why don't I package up all the things I like to do? So I love helping people learn about money. I had designed some courses with our human resource department, learning development. So I got my teaching job, and I always wanted to continue to work with business owners because I think that they're making so many great things and bringing them into the world. And if they had help on that one area, they could do even so much more. So kind of packaged up everything I like to do in 2016.
26. Now, so I got to ask you, it's funny 2016 because that's actually when I officially left my law practice. Although I'd been part-time for a while and did my own thing. Were you scared?
I don't think scared is the right word. I was nervous. I had a very fair severance, so I knew I had time. And because I understood the financials and I've worked with so many businesses, I was feeling comfortable from that way. I was scared of visibility and scared of putting myself out there and certainly doing more of those kinds of things that weren't necessarily in my job before. So really had to spend a lot of time learning more about marketing, social media, sales, all kind of the nuts and bolts that make the business, and actually make a whole new group of friends as well, because most of my friends had jobs. And so they weren't very helpful for me when I was trying to navigate this brand new world. So trying to increase network and be able to learn from other people, because I was an expert at 3 things as a banker, and then I had to learn 50. So you can't do that all on your own.
Right, for sure. Yeah, and you must work with folks that are making that transition. Do you have any recommendations? Like I've heard, try to have a year's worth of living expenses, or, some kind of cushion, which definitely can make things more comfortable. But do you have some sort of a recommended approach to that, or does it just vary so much from person to person?
I think it really varies, not necessarily person to person, but more so by the industry that you're going to be in. Like if you're going to, instead of doing it in a corporate role, take and do consulting in the exact same thing, and you've got a bunch of people who said they'll hire you, that's a little bit easier. You wouldn't need as much of a buildup. If you're going to open something that has a physical presence, you're going to open a restaurant or you're going to open a store, you certainly need to be able to qualify for financing, because it's going to be a huge investment to get set up, whether it's a franchise or you're just starting from scratch. And then you're going to have probably a staff and have to source inventory. So you're going to need to have a longer runway, because it's going to take a while for word of mouth to get out and for you to bring up your marketing efforts. If it's a product and you're going to sell it online and you've already been dabbling in it, you can take it to a bigger market and just raise the profile. That would be a little bit lesser of a commitment from a cash standpoint. So it really depends. And so taking that time to work through a business plan, what are your prospects? Who already likes it? What feedback do we have? If you have the benefit of feedback already, it's going to make it a lot easier transition, because you know what people want and what they're willing to pay.
Yeah. Yeah, that's one thing that I like about my business, and I suspect yours is very similar. There was no upfront investment, really. Mm-hmm. I mean, and profit margins are 90+%, because there's just, you got a camera, a computer, a phone line. I mean, that's really all you need. But if you're going to go into a business that needs a lot of capital up front, and I have friends that have done that. I have friends that open restaurants or tire stores, or, you do need a lot of capital. So definitely could make a huge difference. I'm curious, are you dealing with issues, and what kind of issues are you seeing given the time that we're living in, that we're dealing with COVID? The economies, seem to be doing fine, but it almost seems like they could not be doing fine at any moment. Are you seeing issues, and maybe you've had even clients that had businesses that were severely impacted by COVID?
Absolutely. Again, it comes back to what industry are you in? Were you able to, if you were in a harder hit one, were you able to pivot? So if you're a gym, were you able to get some of your stuff online? Mm-hmm. If you're a medical center, physio, chiro, massage, what could you take some of that online and do virtual stuff? So chiro and physio, they're doing lots of appointments. Massage a little bit harder. Some of the key things, like I was working at TD in the 2008 financial crisis. We know that companies who were planning and companies who had access to cash performed a lot better. That has been the same throughout this pandemic, because we're all in the same storm, but we're all in different kinds of boats as we navigate. So we've got some people in little life rafts who are clinging on, and they keep getting locked down, and it's very, very challenging. You've got other people who were in the right industry at the right time. If you were doing any kind of healthcare related anything, you're probably doing well, and you probably actually can't keep up with demand, but you might have a cash problem because you can't fund it all if you're growing inventory and all that kind of stuff. It really, really depends. So I've seen people do really well. I've seen people take something that was broken and fix it because they actually got excited and were able to fill a new need in the market. And they may not have been doing well if things had continued pre-pandemic because they weren't being innovative. Then seen some others just really hard hit because of the industry they're in, and then other people just continue to perform strong. So it's really all over the place. Government supports have been good, not perfect. Certainly, one of the things I saw that reinforced things that I knew before, I always think there is benefit in having a salary from your business, even if it's a small amount. Some of our supports in Canada were predicated on salaries, not just dividends or payment through shareholder loans. And so for a couple of reasons, I was already a fan of that. One being that you probably need to have credit in your personal life. And it's a lot easier when you have that documented steady income from a company to be able to qualify for a mortgage or credit card, whatever you may need. And then with the pandemic, just really saw the value in that you've got that steady salary there. So the supports came along to those business owners who were actually expensing that.
Yeah, that's a good point. It's certainly true in the United States, not only in terms of credit, because it can be hard to qualify for, say, a mortgage if you don't have a W-2 income. But it can affect retirement contributions and tax advantaged accounts in the U.S., again, depending on your corporate form and what type of retirement account. I was just dealing with that with a SEP IRA, the type of retirement savings account here in the United States. So I noticed on your website, in addition to business owners, you have content for young adults. And so I'm curious, do you help folks who don't own businesses, or are you more or less just focused on business owners?
So the coaching that I do is primarily for business owners, but I am the executive producer and host of the Young Money podcast, which is the advice show for young millionaires in the making. So I do lots of speaking and educating through the podcast to either student groups or young people. So we target 18 to 30-ish in age group. And I say people who love them because we've got listeners of all ages. And my goal is to really make it fun, easy, accessible, bite-sized episodes where people can learn something and actually put it into practice. With the same theme, though, of financial fitness, where everybody's starting where they are. You need to take small imperfect actions every day, and that you are responsible for your financial future. You don't need to do it alone, but you certainly need to be accountable and take steps.
Does your show cover investing topics and how to invest? And I'm curious if it does. I see you nodding your head, so that's good. What's your approach to that? What's your philosophy?
And to investing?
Yes.
So I think it comes down to people's goals, what their risk tolerance is and their time horizon, and actually sitting down and working with someone. I'm a huge advocate of fee-only planners. Where they can actually develop a financial plan for an individual. So then they can go and execute it on their own. Especially for that age group, you're going to be hard pressed to be able to go and find a financial planner who will work with you ongoing as you're just starting to amass assets. You're probably sitting on a lot of debt from your education. So I think having a nice roadmap really helps people do that. We've had lots of guests on the show, seen it through also what I teach at school, like people who are actively trading very, very frequently. Their returns are less. They think because they're more actively involved that they're going to do better in their investments, but that's actually proven to not be the case. The biggest question I do get is about investing. How do I do investing? And I like to bring people back to, okay, so what are your goals? What are your plans? And let's talk about your spending habits as well. And let's talk about debt. And people want to jump to what they think is the most fun stuff. So we've had a lot of questions over the past year around cryptocurrencies, Bitcoin, also NFTs, a non-fungible token. So it's been fun for me because I've been able to learn about all this stuff as I bring the content to the listeners. So
you brought it up, so I can blame you. What's your take on investing in crypto and NFTs? And by that, I guess really what I could ask you is, do you invest in crypto and NFTs?
I do not presently. I think that it comes down to your financial situation and what you're comfortable with. If you are saving for goals and you do not have any flexibility to have fluctuation in your returns, you absolutely need to stay away from it. But just like anything, you can have something in your portfolio that's a little bit more higher risk if you've got it all balanced out. And so that's a personal decision. But I struggle a bit with crypto because there's no fundamentals that it's tied to. And so the price moves where the price moves. And if someone's tweet can make the value move significantly, I think that's a little bit risky, in my opinion.
Elon Musk.
So it really straddles, is that gambling? Is it speculating? But it comes back to your goals. If you have enough flex in your financial situation that you can play around and it's not going to be you missing rent payments or debt payments because it didn't perform well, then that's okay. Everybody gets to choose what they want to do.
Sure, of course.
I'm still trying to figure out the NFTs. I don't see the appeal yet. I do own one, because I wanted to see how it worked. And in my little adventure with it, between getting my crypto wallet and paying the fees on the exchange and then paying the fees on the site where I bought it, I paid a lot of fees. So it was not worth it. And I've got this NFT of a golden retriever. Well, it's probably the cheapest I could find.
And not to turn this episode into one about cryptos and NFTs, there's a lot of talk about NFTs and smart contracts. And their promise. I'm not convinced that they're going to change the world as we know it. But as you know, I've been wrong before. Maybe I'm wrong on this one. I guess we'll see.
One of the things I do particularly like about NFTs is that if it is the work of an artist, they actually get to participate in the continual appreciation of their art, which in real physical life, that never happens because only the holder of it. But other than that, I'm with you. I'm waiting to see.
No. And I think that's a really cool feature of NFTs, but it's a fairly narrow, application of it. I mean, if you're an artist, it's really, really important. And I get that. And I even know folks that are, selling books as NFTs, and then if you resell it, they get a cut, and so that's kind of interesting. So I guess we'll see where that goes. Maybe I should sell. We need to write a book. We can sell it as an NFT. Who knows? Well, listen, it's been a lot of fun chatting with you. For folks that want to follow you, maybe small business owners that want to hire you, or young adults that want to follow your podcast, where should they go?
Best place to find me is on LinkedIn. So Tracey has an E and Bissett has 2 S's, 2 T's. Post really regularly there. So I would love to hear any questions or comments. So send me a message.
That's great. All right, Tracey. Well, thank you so much for joining us today.
Thank you. It's been my pleasure.